All right, gang. So you already know new season, new year, all that good old stuff, right, man? So it's going to be 2024, guys. Y'all have to understand that this is the new way of the world. SMSFXmentor.com. All right, listen, if you don't understand this type of stuff, and you need further details, go to smsfxmentor.com, right? I got a rundown, a list of everything that you really pretty much need to know to get into the market and make money, all right? But like I said, it's not going to be easy. It's going to be a process, but I can shorten that learning curve. And if you want to join, right, go ahead over there, click the free Discord, click the free course, go in there. I got a whole course, steps 1 through 10, on how to start day trading and making some money. All right. And then if you want further details, one-on-ones with me, personal sessions, setting up with pairs to trade, what sessions that's good for you to trade, what time frame you should be looking at, right? A formula. And go ahead, holler at your boy. All right. But today, man, we're gonna get off into pretty much patterns. All right. So I'm trying to teach you guys everything without having to use as many indicators as possible. Okay. And then we're gonna go off into indicators. We're gonna go off into EMAs. We already did one, right? We did the Fibonacci, right? So we're gonna go off to EMAs. We're gonna go off to stochastics, RSIs, right? And we're gonna go off to oscillators, right? What else? Other little things that'll help you, like tips and tricks, pivot points, things of that nature. Like I said, that'll start getting into advanced. Right now, I'm speaking on beginners. This is the things that you need to know, beginner things, right? Maybe the video after this, we'll go into candlestick patterns and stuff like that, or candlesticks. But right now, we're going to go into patterns of candlesticks, okay? So we're going to show you how to look at all how candlesticks and all that stuff works, as far as charts. All right, so now we're gonna share it. I always go over definition. So I don't have my phone with me right now, but we're gonna share the screen, and then we're gonna pull up the definition. All right, so guys will be like, "Oh, Ken said made this up." All right, we don't want to do none of that. I want to talk like this stuff to you. All right, so now here, let's go over here. Let's add this tab real fast. Go to Google. Right, let's put up the definition real fast. What patterns are candlestick patterns, right? Slowest internet in the world is Spectrum, all right? So if you're thinking about getting Spectrum, double think, not to slander. They're annoying. Okay. But okay, so definition. Remember, guys, always do your due diligence. Don't ever just take somebody's word for it. Candlestick pattern. I always like to give you guys the definition off Google here, and then I like to give you guys my definition. So in financial technical analysis, candlestick pattern is a movement in price shown graphically on a candlestick chart that some believe can predict a particular market movement. You pretty much see how they like saying like that some believes, and actually we're not gonna even go into this because this is more like literally candlestick patterns. Let's go to we're not even gonna go into patterns for an exchange, right? Listen. Okay. Sometimes even Google be acting crazy, man. Anyways, guys. Anyways, man. I'm not gonna. The video already starting off crazy. Anyways, right? So A pattern, a candlestick pattern, or a pattern in the market is something like a flag pattern, or you know. So I guess they don't really have a definition for it, I guess. Um, but this is an example of a flag pattern, right? So it's pretty much the same definition of what they said. So it's just something that a pattern in the market where you know you're looking at the market and you're like, okay, um, um, you know, this can predict forecast on where price could go. So you have some things called like channels. You have flag patterns. You have pennants. You have a million different things. Continuation patterns. Change of character patterns. Right. You have all these different type of patterns. And I'm pretty much wanting to show you guys how to look for them in um, on the charts, okay? And so when these patterns pretty much occur, you're pretty much waiting on certain things and certain ways to enter into the market, all right? So I want to show you some patterns, like as far as a whole, right? So this first pattern I'm going to show you is what you call a, excuse me, bullish channel, okay? But a bearish flag, okay? So you know, this is really advanced, guys. So you have to understand what's going on. A lot of people already understand, they already know. So a lot of people that's trading already just like, okay, they're just using it as a they're just using these videos as just a refresher course. Um, you know, and like I said, all patterns are not going to be perfect. So you have to literally weed them out and see what's going on. Uh, because all of them not going to be like super perfect. So you know, this is what you call a channel, right? When prices is going inside a row, like going to the upside, but like still like back and forth, back and forth, back and forth. But as it's going back and forth, back and forth, back and forth, it's pretty much still going up, all right? And so what we wait on is maybe a double top like that on a trend line, right? And then price going down. But smart money waits on the break of this trend line. So the break of price not getting back to this point or this point or this point, right? Um, and then going back up, that means that it's breaking this pattern. So if it came here and hit so if it came to this point and hit, and then when it got here, it hit multiple times. So in your books, you would say, okay, price going to hit here. Okay, price is going to hit here, and it's going to hit here and bounce back up, right? So maybe this last high here or this last high here, right? And that's how most traders would think, right? Um, okay, and so it's gonna go back to this high or this high right here. See how this high stopped it right here? Boom, 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 pushed it down. So there's other things that you got to look at. Like I tell you guys, you cannot just go off of one specific thing. So in the market, when it comes down to trading, you know, you can follow all the pattern rules. You can follow everything that you want to follow. But if you don't pay attention to the details, you'll be stuck in positions like this. Right? So your trade will look like, all right, boom, going for a long position. You would say, okay, it's gonna get back to here and bounce. I'm about to go back to work. Right? My target is next high up here. Boom. This next high. Boom. Oh, I'm gonna get a 1 to 3, 1 to 4, 1 to 5. Right. Next thing you come back, boom, 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 I blew you out, right? So you know, paying attention to everything what's going on is key factor, key prime in these type of situations. But yeah, remember we were just talking about trend line. So trend line, trend line, trend line. Okay, trend line, boom. You just got fried. You know what I'm saying? So this is what you gotta look for, a pattern. So um uh this is more like a bearish pennant or a because it's not a flag pattern because it's a reversal. See, a flag pattern would have been more so Well, it can be. Would have been more so like a F of would look more like this. Bearish flag would look more like this. So 1 second. It would look more like boom, boom, boom. Okay. So as you notice, you see how kind of like it's going down in a bearish type effect right here. It's going down, bearish flag. And so what happens is, it comes in here, boom, shoots up, boom, come back down, boom, shoots back up, boom, come back down, boom, and then so that's more like a bullish flag, right? So this is more like an example of a bullish flag, right? And so, like I said, remember, the reason why you cannot just depend on patterns is because, right, in that same area, you just saw two different patterns going on, right? Within this same, you know, area. Okay. And so boom, 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 and then price pushing up. So many people saw this flag pattern and was ready to take, bearish, and then boom, price pushed up. Bearish, and then boom, price pushed up. Okay. Um, Same thing is for this one right here, which is, like I said, a flag pattern as well. Price was going bullish, and then it went bearish. And so pretty much, uh, you know, it was a overall big flag pattern right here, right? So yeah, price going something like that. Excuse me, and that, okay, and then hit your F. Sometimes. Right, and so pretty much what price did was go boom, 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 and now boom. Okay, so flag pattern, but you look for these channels first. I always try to look for the channels to see what's going on. Okay. And you have to understand why these channels are being formed, or why these patterns are being formed. Pretty much price is going to be in a consolidation. So price is pretty much in a consolidation. This is the type of stuff that you get. That's what happens in the market. So here go another bearish, sort of bearish channel, right? So boom, every time when price got to this low point, it pushed up. When price got to almost to this highest point, it pushed down. Price got back to this lowest point, almost to the lowest point, and pushed back up. Boom. These are considered um, um, consolidation areas where you can still make money off of if you understand how to make money off of it. So pretty much you're depending on price to stay in these parameters. So when price got to this point, never breaking up above it, it was time to sell. When price got to this point, never breaking below, it was time to buy. Same thing, got back to this point, it never got back above it, or never got back to that last high over here, right? Never got back to this last high right here. Okay. Um, um, so that's how you would look at it. This is the last high here. Boom. And so when price got back to this point, obviously it never got back up to that last high. It never shot back up, retested that last high. Time to sell. But see, now it's get tricky because now I get back up to this point. It never get past this high again, right? And then it sells off, but then it never get back to this low again. And then it buys up, and it's starting to break this trend line. Okay, so it started to break the trend line, retesting this last high here, right? Then it broke the trend line again, retesting this last high. Okay, and then it failed to retest this last high, so it came back down to this last low, or this last high. Okay, so remember, price literally goes back and forth, back and forth, back and forth, back and forth, teeter tot, teeter tot. But you have to be super prepared to understand this type of stuff, because it's not just simple. It's not just Oh, you know what? It's easy because it's not. Okay. Um. uh, okay. All right. Cool. So now we see pretty much how to catch um and so remember at the end of the day you cannot just go off one thing because this would be considered right a flag pattern too. Look at the F right there. Flag pattern, that's messed up. Bearish flag, bearish channel, bullish flag. So you notice that when pretty much if you're paying attention, that you'll notice that if you start seeing bearish one in a consolidation like that, it's probably going to try to go up. It don't mean that it has to shoot to the moon, but it means that at some point, price is going to probably reverse, or come, change character. Another secret is vice versa. If you see price going up a little bit, now remember, all this still stuff is still perfect timing. You can't just see it going up a little bit and say, "I'm gonna just get in here and go sell," and then boom, price pull back up. Now you're back in default. You have to wait for price to break these barriers. So you got to wait for price to break this whole area of support before Because what if it got back to here? What if it got back to there and it did this? Boom, boom. See what I'm saying? We testing this last time. What if it did that before coming down? So you got to be careful, but these are similar or patterns you would be looking for in the market. I want to try to show you guys. Okay, this is a cool example. So you won't get it twisted. All right. So this is even though it did what it did a little later on, I just want to show you an example of what I mean. Let's just say you was here with it, right? You was here with it. Okay. And you was just trying to simply depend on pattern. All right. Let's just say you were. Okay. Well, in most cases, when the price is going bullish like this, right? More than likely, you're going to look for price to do boom, one or two things, come here, and then drop, right? Or even drop down to this level. More detailed trader or a more experienced trader would. That's what they would have did because it's literally a bullish flag, right? So I'm pretty sure, okay, boom, price is going to sell off because it's a bullish flag and it's not making no higher high. It made a lower high right here, right? So just imagine if you're just going off lower low, lower high, the basics, right? Or even advanced shit, you know what I'm saying? Even if you're going off advanced, right? Price got to this point, this point, this point, boom, it should go in here and fall down. It should retest its low. Even though it did in the future, what did it do first? It got back to the support point. That's what I said. You gotta make sure that you're a person that has patience. It got back down to this supported point, and then what it decided to do? Okay, it decided to bounce off that support, push up. Okay, retesting this last higher. Okay, or this one. Okay. And so you got to pay attention to this type of stuff because you cannot just pretty much go off of these, these patterns. Same thing as here. You know, you come here and you come here and you say, okay, boom. More than likely, somebody that got experience or know a lot, they're going to come here and they're going to try to push this thing up to here. But just be mindful. All right. Just be mindful, bro. That it does not have to shoot up or rocket to the moon because we got a pennant here or a ascending pennant or a like I said a bearish channel bullish flag, right? So it did what it's supposed to do. Came here, you would have been in profit, right? And then you would have came back, okay, if I could at least shoot up to here, I'm gonna take it right here, big dog. Boom. And then boom, boom, boom. Now you burnt out. Boom. Now I came back down here, retested here. Now you hit. You see what I'm saying? So you want to make sure when you're following these patterns that perfect example here, flag pattern. Here with it. There you go here with it. There you go here with it. That's why I like to show y'all the bad and the good. All right. So you got the flag pattern. You all set. You say, hey, you know what, man? I'm gonna go ahead and go for this long. Put my stop below here. And Ken said, hey, let me test this last high. You either going here with it or here with it. But let's just say you was like, I'm gonna go here with it. I don't want to be too greedy. Yada yada yada. Now, although price did get to this point, guys, look at what happened. Flag pattern. I mean, hey, price get here, it should go doing, right? It should bounce off there and continue to go up. It should. That's what it should do, right? It should come here. It should come here, flag pattern. Go boom, 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 boom. Once it got here, you was in. You can take this thing. Excuse me. You can take this thing up. Okay. Right? What you did later down the line, but look what happened. Right? So unless you're willing to do a one-on-one or anything, you wouldn't have been able to do that, bro. Trust me. So you would have stops here. Well, we stopped you out. You mad at the world later down the line, you would have came back and go ahead and shoulders pattern. You had a pure break of that, retesting this last low down here. Plus, you had a head and shoulders pattern. That's what made this look so much more uglier. They go to shoulder, and they go to head, and they go to a second shoulder. Okay, so these are head and shoulder patterns. So we come over here, go back. And these are head and shoulder patterns. This one right here is an inverse head and shoulder pattern. So go to head and shoulder pattern. Oh, man, I gotta get out of here. Okay, head and shoulder patterns. So head and shoulder patterns. Sometimes they look sloppy, sometimes they look cute. Head, shoulder, head, shoulder. Okay, kind of see little examples. Now I'll go to inverse. Inverse head and shoulder pattern. You see, it's pretty much the opposite. You see, I got a little example there, but go the opposite, total opposite way. And pretty much, like I said, some look nice. They go head, shoulder, shoulder. Some look nasty. They go head, shoulder pattern right there. Some people like to use, can't think of the word for it because it's literally useless. But some people like to use, what is it called? The butterfly, whatever the hell it's called. Some people like to use that as far as the head and shoulders. But like I said, it's always gonna be a left arm. Left shoulder, right shoulder, and a head. Right? First shoulder, head, shoulder. Okay, you're familiar with them, understand them. It's millions of other ones, but like I said, I can't get into all of that just in one sitting, one call. So not going to. But as you can see, this head and shoulder pattern is followed by a lot of flag patterns, kind of keep you in the market. A flag pattern. And boom. And boom, one flag pattern. Same thing here, another flag pattern. That made you say, okay, it's going to continue to go up. So you got to know how to learn how to trail your trade as well. Head and shoulders cost 2 flag patterns. Okay. 3 flag patterns. Okay, I can hold this bad baby. It's still going up. However you want to do it. Okay, so that head and shoulder costs 3 flag patterns and then consolidation. So, which is just a bigger flag pattern. But knowing what, having meaning behind every trade and knowing why a trade is doing something is excellent work. Okay, and so forth and so on, right? But you guys see the drift, you understand. So you just want to look out for this type of stuff. It seems hard, but it's not. And once you start paying attention to it and then you start seeing it over and over again, it'll get easier and easier and easier step by step. So like I said, just name a few. I'm not trying to get on to trying to show you guys one more example of like a pennant. Pennant almost look like something like this. So you'll have a line going like that, and then you have pretty much one going like straight across. And so what happened is we call it a pennant. It's like pinchers. So price going down, 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 down to get really small inside one gap. But it's usually always a straight line where price is not going anymore. And they usually evolve when the market is reversing or turning around. Okay. So remember, the market was coming down, down, down. It's stuck into this ascending pennant. Then pushed up, retesting his last higher. Retesting his last low again, came back up to retest his high. And then continued to start going up. No. Okay? So just pay attention to what can start stuff off. Even if sometimes, let's just say you were here, you could have went back here to see what was going on. You get what I'm saying? Even if you were here, you could have went back. Or you was here, you could have went back here, seeing what started everything. And then boom, 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 boom. Right? So even when you were here, you can come back over here and see what's going on. Price ain't getting back above this point. So any point price not getting back above, I'm looking for a sale. So just looking at these patterns, man, they will help you out tremendously. You got this going up like this. So I got another example of a descending, right? Of a descending, right? You got this flat top here. Price goes going down, means I got low, and then the drop, right? You dropped all the way into ascending. See what I'm saying? So price just repeats itself, big or small. It's gonna keep repeating itself. And more likely, them small ones be big ones at the end of the day. See how them big ones just be like, okay, a little drop, and that was it. So you got to pay attention to what's going on, what you need to understand, what's your confirmations. And then, you know what I'm saying? You can put all this stuff together. Everything works, though. Everything that every YouTuber or anybody was trying to explain to you, it all works. They just didn't tell you that what they felt, and that's what I hate. What they fail to tell you is that you cannot just use these one things or this just specific thing by itself and think that you're going to be making profits all in the market. If it was that easy, everybody would do it and everybody would be rich. So it's all about a patient game, understanding what worked for you. What's your schedule? What can you do? How can you work around this? How can you make money around everything that's going on around you? Once you find out who you are and how everything affects you, it'll just be second nature. Okay, guys. So smsfxmentor.com. You don't need $1 million. You can start off with $50, $100, right? And grow account, man. You can grow 10% a day, which would be $10 a day. By the end of the month, you would turn that $100 into $300-$400 if you want to do it with proper risk management. All right. If you want to risk a little more and be a little more risky, you might end up with nothing by the end of the month, right? So it's better to have something than nothing. Then $300-$400 by the end of the month. That's not your gas money, bill money, or nothing because you just literally made that money and it looks like it doesn't exist. It's like it's okay, isn't it? I don't have to use it for anything because I put 100 to the side. So you can take your 100 back. Now you got $300 in the market. That's literally all made for the market. And then now you can go ahead and try to risk, right? You don't want to risk your own money. You can risk 100 because that was what you started with in the first place, and you had 100 to risk. So you can risk that 100 next time, and then now you might get a what if you get a 1 to 4, 1 to 3? Now you turn down $100. If you risk the whole $100, you can turn down $100, $300, $400. You get what I'm saying? And so now you got $600, $700 in your income. You see what I'm saying? Within that month, because you risked that $100 throughout the whole month. Or not within that month, within a week, right? You risked $100 in that 1 week. I'm gonna risk $100 this week. Boom. And at the end of the week, you made $300, $400, or 1 to 4, 1 to 3 off the 100. Then you have to, you see what I'm saying? Now you're making $400, $500 a week. Next week, you do the same thing. Now you got $400, $500, whatever. And then you say, okay, I can risk $200. Make $200, and you say, okay, I got a 1 to 3 or 1 to 4. Boom. That's 203 times. 2 for 6. You know what I'm saying? Plus the 2 you risk. 800. Plus the money that you got from last week. 400. Plus the money that you started with. So you got to look at all this like, boom. It's all, and then now you can start paying yourself. Okay, I'm gonna pay myself $100 a week because that's how much I risked in the first place. And I found the account. Okay, and this time, boom, I'm at $250. I'm gonna pay myself $250 this week. You see what I'm saying? And you have to go by your mentality has to be on that level. Like just because you're making money, you make $1,000, you don't take the whole $1,000, but you do pay yourself. You take 10% of that, or you take, you know what I mean? Like you figure out what works for you, and you do that. You'll be more successful than somebody that's just out here just doing whatever, hopping in the market. Oh, I got this much money. Oh, I'm gonna risk this. I got this out there. No, you know what I mean? SMSFXmentor.com. Let's get it,